87% of CEOs are confident in the growth prospects of the U.S. economy over the next year. That's according to KPMG's latest CEO Outlook Pulse survey, which polled over 100 CEOs from some of the nation's largest companies. Joining us right now is Paul Knopp. He is KPMG U.S. chair and CEO. And, Paul, I think what I found most interesting about that headline number is 87% felt confident in the U.S. economy. The number was lower, something like 78% for just in their own company's future. Usually it's the other way around. People think, I'm not sure how I feel about the overall economy, but I feel pretty good about what we have happening. How do you explain that?
Yeah, so I certainly think that CEOs are looking at the issues that they face into. So geopolitics, cyber right now are really important. And then you think about the structural changes that happen in the economy, such as sticky inflation rates and such as the what feels like a really tight labor market that's going to continue. I think they definitely are looking at how they've navigated all that over the course of the last several years and are thinking that with that high level of confidence that they're going to be able to continue to navigate it. So, it's not clear why that small gap exists, but I think at the end of the day, what's important is that there's a lot of confidence among CEOs about the prospects for their own companies, too. What
you mentioned about jobs, I think, is pretty important, too. Yeah. We got a hotter than expected inflation number again yesterday. We're looking for PPI today. And the economists who are still anticipating that the Fed is going to cut this year say that because they think the job market is going to turn over. They say that based on what they're seeing in small businesses. But when you talk to big business leaders, the CEOs there, they assume that they're going to continue hiring.
They do. 72% of CEOs said that there will be modest to significant increases in hiring over the next 12 months. Only 4% said that they were actually going to reduce hiring. I think it's a sign of that confidence they have in the future of their businesses. At the same time, there's a little bit less clarity around both the direction and the duration of interest rates right now, whereas maybe 6 months ago we thought there was a lot more clarity. So I think that's causing some CEOs to really step back and think about how they can use things like generative AI to increase the efficiency of their workforce.
Well, that was another thing that surprised me. When you talk to them about generative AI, every company says that they're doing it, but the CEOs you surveyed, only 41% of them, I think, said that they'd be spending more on generative AI this year. More than half said they'd maintain and keep their budgets flat.
Right. Last year, we saw generative AI as a top investment priority, though, for these CEOs. So that 56% staying flat is really flat off of a very high number.
Okay, so you look at that much more optimistic.
Yeah, and then 31% of that 41% composition was a 50% or more increase in spending on generative AI. So we still see it as a really huge priority for businesses. And they're seeing it not only around making sure they have a trusted AI framework like we do at KPMG, but also to ensure that they make those use cases, those pilots now real, and they industrialize the use of generative AI moving forward.
The biggest issues that they are concerned about, I think regulatory issues top the list.
Yeah, so regulatory, safety, the ethical, safe uses of generative AI. Cyber is certainly a more prominent issue with generative AI. So again, what we need to do is first put in place trusted, responsible frameworks around AI, use that AI to really promote strong business practices. And that is what we see going on right now. We see a lot of movement in coding, for instance, software coding, real implementation of that, finance, IT. There are real use cases that are being put in place to cause businesses to become more efficient and more effective in what they do.
In terms of M&A spending, we keep hearing that maybe there is going to be more M&A activity this year, but the survey that you did showed that a lot of them are waiting for potentially an administration change.
Yeah, so
what happens with the election first?
Right. So the two biggest issues undoubtedly are interest rates and the direction of interest rates and shifting business valuations. The multiples are still very high, even in the private markets.
Oh, that's interesting.
Yeah, they are, much like the public markets.
Yeah.
So the election just adds an additional layer of complexity to it. And I think it was 62% of CEOs said they would wait until after the election to significantly increase either capital expenditures or acquisitions. So I think it's just another element of uncertainty that we have.
But they think prices are high. You just said valuations are high, meaning you don't think this is necessarily going to last. You think it could come down.
So I think, yes, eventually. I mean, I think as businesses become more realistic about what the values of their organizations are, ultimately they will come down.
Paul Knopp, Thank you very much for joining us, Paul.
Thanks for having me.